Social media has been awash with screenshots of the cedi making a further depreciation in value against the dollar, selling at 6 cedis per dollar. Now, Fitch Solutions research arm of ratings agency and data bank research are forecasting slightly different end-of-year rate of the cedi to the dollar, as most forex bureaus are now selling the local currency at 6 cedis to a dollar, whilst Fitch Solutions are projecting a 6 cedi 32 pesos for a dollar by the end of the year. Data bank research is predicting a 6 cedi 14 pesos, about 3 percentage points depreciation. Charles Nixon Yeboah has more in this report.
Joy Business is learning that the Forex Bureau began selling the local currency at 6 cedis to a dollar almost 1 month ago, though it is going for about 5 cedis 94 pesos on the interbank Forex market. This is because demand for the American currency has shot up. However, the pricing could have even been higher, but for the intervention of the Bank of Ghana, whose bi-weekly Forex forward auction has aided the supply of dollars to the market to meet the rising demand. Despite all this, the cedi has lost only about 0.6%. Despite all this, the cedi has lost only about 0.6% so far this year, according to the central bank. Most analysts believe the outlook is promising despite the recent pressures. This is largely because of the expected improved export, strong international reserves, and the upcoming cocoa board syndication in September this year. Meanwhile, Fitch is attributing the rebound of the global economy as the rationale behind its end-year cedi to dollar rate of 6 cedis 32 pesos, a little above 4% depreciation. Data Bank, on the other hand, said the recent portfolio-induced pressure tempered with its earlier optimism. However, it believes the cedi should remain supported by the country's gross forex reserves of about $10.99 billion.
Well, let's bring in Courage Boti of Data Bank, and economist. Courage, many thanks for joining us. This is a developing story. Explain to us what exactly is happening on Ghana's forex market. If you could kindly unmute your microphone so we could hear you better, Courage.
Sure. Good afternoon to your listeners. I think the cedi story this year has been a good one, largely until midway through June, where we've seen depreciation pressure starting to set in again. We've seen the cedi appreciate from the start of the year to, I think, around 0.58% appreciation. The driving factors so far have been, at the start of the year, we saw that with the extremely very accommodative monetary policy environment in the external markets, offshore investors found favor in emerging and frontier markets like Ghana, where uptake for our local bonds were so high, and we saw a lot of volumes driven on the secondary bond market also by this offshore participant. What this did was that it brought a lot of forex into the system, which supported the cedi to the early year appreciation that we saw. And that actually lasted through the first quarter and in most part of the second quarter. But with now growth momentum gathering pace in the advanced market, and there is the increasing risk of inflation in the US and most of the major markets, which has triggered the talk of tapering on asset purchase program for the US Treasury, and then of course many other central banks and then fiscal authorities out there, we realize that there is some increasing risk aversion triggering sell-offs in recent weeks. And so we saw from 21st June all the way till now that rates on the bond market has been going because offshore participants are selling off and then moving into US destinations where there is anticipation that rates will pick up soon. And that is what is driving the trend now. But as we are now, the depreciation rate is still very reasonable. And then that is where we are projecting based on the trend we've seen so far. And then the fact that we have reserve levels that is covering, over 5 months of import cover, which hasn't been the case in a lot of times past. We have a lot of cushion to support the cedi for the rest of the year. And that is why we do not envisage extreme depreciation beyond, say, 3% for 2021.
Courage, I wanted to hold on to your thoughts there because we're also joined by a player in the forex market, Benjamin Apai, who joins us via phone. Benjamin, you trade in forex. What is the cedi to dollar exchange rate as we speak?
Well, the rate is, thank you once again. The rate is 5.9 and 6 cedis for buying and selling respectively, as of now.
So you're currently buying and selling at 6 cedis?
It's going for 5.9 and 6 cedis for buying and selling respectively.
Well, our checks at the various interbank market quoted by the Bank of Ghana shows that they're selling at 5.9, so rightly stated on the average. But there are concerns about the 6 cedi, sale of the cedi to the dollar.
Well, with the forex, it's like the retail part. It's based on demand and supply. So when the price of the demand would depend on the price of the supply. So we take it at 5.9 and we sell it at 6 cedis. That's for the forex bureaus. For the banks, maybe they get their dollars from the central bank and co. But for the forex bureaus, for them, they get it from the market. That's why it goes that way.
So for how long have we been selling it at 6 cedis?
Well, it started, let's say, it's almost a month because it started the 2nd of this month. On the 2nd of this month.
So, I mean, what are your clients telling you, and how is this shaping your business flow?
Well, for the clients, for those who are changing their foreign currencies, like their dollar to cedis, they are happy. But those who are buying the dollar for their business, they are crying because it's having a lot of pressure on their business. So that's the mixture. That's basically because those who are buying to import goods, they are crying that the rate is affecting their business. But those who are changing their dollar to cedis, for them, they are happy because they are getting more money.
Well, we could understand that. But Courage, you are an economist, having to hear an operator within the forex market tell you that the demand has, arisen, and they've been selling at 6 cedis for the past month. I mean, what kind of message does it send economists like yourself?
It's a normal behavior. And you see, there are seasonal structures to currency trading or performance in even our country. The first quarter is always associated with the seasonal demand for settling letters of credit and all of those trades during the festive period of December. And when you enter the second quarter, what normally happens is that all the multinationals are repatriating their profits, and that also creates another level of pressure. And so to be under 1% depreciation at this point in time is actually a good performance of the cedi relative to the past years. Now, 6 cedis I don't think is that dreaded because on this retail market, we've been doing around 5.8 for a long time, or 5.7, 5.8 for a long time. And it's just a matter of time, like he said, the supply-demand dynamics. Once the demand levels from people wanting FX to repatriate either as profits or people looking for money to trade, and then, mind you, trade is picking up and import volumes are growing because the economy is coming back to stream. So these demand pressures are normal and will come. What matters now is where are the supply sides? The challenge has been that one major supply side player, which is the offshore investors on the market, are retreating because of development in the external market, not because of the fundamentals we have available. And until that, you can control much. And you can see that, if you observe the market, over the last 3 or so weeks, the Bank of Ghana has been very heavy on the market with liquidity interventions. Well, the idea is that you want to see it through this seasonal demand pressure.
Okay.
And once we third quarter, things kind of normalize a bit.
But help us understand the prospect. So what lies the outlook of the cedi as we speak? Granted, most of the instruments that the BOJ has injected, as well as reforms by government, where lie the outlook?
The outlook for me, again, relative to what we've seen in times past, you won't call a 3%, 2.5% depreciation alarming, given our history of recording even up to some 30% depreciation per annum, 12%, right. 10%, 15%. You won't call it 3% alarming. So I think the cedi still, despite the intermittent pressures we are seeing, is still relatively very stable. And we should remain so till the end of the year. We shouldn't be seeing more than 3% depreciation by end of the year.